Super grateful to have everyone join us to listen to some RWA, stablecoin, and blockchain Web3 open finance comments with the experts. So first of all, I just want to give a warm welcome to the audience that's joining us globally on this webinar. My name's Kevin Liu. I'm the CEO of DigiFT Hong Kong, and really want to be able to just be gratefully welcome you to the first of the DigiFT Academy. Now, a quick intro to the DigiFT Academy. It's our ongoing educational series for Web3 builders and fintech leaders who want to make sense of tokenization, especially for institutional grade real-world assets, also known as RWAs. Tokenization gets talked about a lot, but it's still especially widely misunderstood. It's still a new area. DigiFT Academy helps cut through the noise with practical insights from both TradFi and Web3 experts, including the great-looking panel that we have here with us today. This includes from asset managers to banks to protocol builders. We cover product, infrastructure, and regulation with a focus on real-world asset applications. This product is produced by DigiFT, a next-generation RWA exchange licensed by Singapore MAS and approved in principle or approved by the Hong Kong SFC for Type 1 and for distribution. The content is especially relevant to CEOs, product leads, and BD strategy heads exploring RWAs within their stack and looking to build out their business further into Web3 finance. So subscribe to our Luma calendar to stay in touch and updated on upcoming sessions. We'd love to have you join the conversation. So with this, we're going to just put up our disclaimer here, just to let everyone know, as a licensed and regulated institution, this is not investment advice. This is a purely illustrative and educational series. So with that, please do take heed. And if you can't read this fast enough, we'll happily send it across to you later on. So thank you for that. Now, moving quickly to the next slide is I just want to be able to kind of tell you a little bit about DigiFT. So we are partners with UBS, Invesco and Wellington Asset Management for on-chain distribution. We're a smart contract RWA exchange platform. And as a distributor, we help our institutional partners find and build use cases, working alongside our friends as well here to be able to cooperate to further build the pie within the institutional RWA space. So you'll hear more about this from our founder, Henry Zhang, who's joining us online. And I'll pass it over to him in a short while. Now, before we get started, I just want to be able to get into the agenda of today. So again, just introducing myself, it's Kevin here. I'll be talking about just a quick overview from on the macro side about the evolution of stablecoin utility from payments to yield. I'll then be handing over to Henry Zhang, CEO and founder of DigiFT, and he'll be talking about the next killer use case of institutional RWAs and how we're planning to see how that vision will play out. After that, we'll be handing over to Ryan D'Souza, APAC Partnership Lead in Off-Chain Labs of Arbitrum. We'll be talking about how L2 blockchain ecosystems have evolved to support RWAs and the use cases. Then on to security. We've got the great Amy Zhang, who is the head of APAC for Fireblocks. Custody, she'll be talking about custody and secure transactions, the foundations for RWA adoption. It's especially true for anyone who wishes to access this. Safe and secure custody is the first place to start. And then finally, but not least, we'll have Tin-Wei Liu, the CEO of StraitsX, one of Singapore's greatest stablecoin providers. And he'll be talking about the stablecoins in the real economy, and perhaps also, given the imminent announcement, just having returned from Hong Kong, giving some insights about what he thinks about the Hong Kong FRS that's happening there, and then more comments about just what's happening in stablecoins globally. So I think with that already, I've given a bit of an overview of the macro, but before we jump into it, just one final housekeeping aspect is Q&A. So we really want to give to you, the community who have given up your time to join us today, to answer your questions specifically. So on your interface, you'll see a Q&A button. Please do submit your Q&A. And as your moderator today, I will look to screen those and provide those questions to our esteemed panelists so we can get their feedback direct to you. Okay. So I think maybe just jumping a little bit into it is Henry, if we perhaps maybe can just get into your section here. Of course, we've had stable coins really grow. Crypto's obviously grown. The RWA market is still very much at its infancy. Maybe can I just ask you, as the founder of DigiFT, just to give a brief introduction to both yourself personally for the audience to get to know you, and then a little bit brief introduction about DigiFT and why you, as the founder of DigiFT, set along this vision before many got involved or even had the idea to be involved in RWA, to really want to build a smart contract driven platform focused on RWA. So Henry, over to you, please.
Okay, hi. Thank you, Kevin. Thank you for my fellow panelists, and most important for the participants for this webinar to talk about this institutional grade RWA and the use case of stablecoins. Myself, I'm Henry. I'm the founder and CEO of DigiFT. I started this initiative about 4.5 years ago, driven by the vision is there's another wave of infrastructure upgrade driven by the next generation of technology, which is blockchain-based, we call the Web3. By background, I was in the traditional finance for 20 plus years. Not just the time in the traditional finance, I have the chance to went through the last cycle of electronic upgrade, which is internet. 25 years ago, everything we talk about, everything will be online. Now we talk about everything will be on chain. Technology is different, but some patterns are similar. When we talk about the online, we also talk about the future will be internet, but people are not very sure about how's the trajectory, what the things will be first and what's the next step. Just like we're talking about the things will be on chain, but what's the first and what's the next? Of course, we have some clues. That's why RWA, stablecoin, and technology and institutional grade technology. I had the chance to went through the life cycle. So when the new technology come up, I'm very excited to see, just as usual, this novel technology upgrade happened every 20, 30 years. Now it's a next generation of internet. That's what I call the Web3, which is blockchain based. It is new technology and much more relevant to the financial industry, which is the center point when we talk about this applied to the financial industry. Because in the last wave of internet, it's transformation, transiting information. Token-based blockchain can transit values. So that even more applicable or relevant to the financial industry. So I'm just so excited to see this trend, and so excited to involve myself and our team, and together with other partners in this panelist, probably with our audience today, to join that one. So that's the basic the drive and the vision, myself and the DigiFT.
Right. Thank you, Henry. So maybe I'll just actually put some questions up there. Thank you for the introduction. The RWA space is obviously moving so fast at the speed of light. Just 1 to 2 years ago, we were tokenizing T-bills, and today we're tokenizing money markets, private credit, and equities with billions in AUM already tokenized. Where do you see this market kind of going forward in your own vision?
Yeah, this is a very important question. So-called adoption curve. Just like when we again look at back the history, when we start to bring everything on chain, online, we ask the same question. So what things can be online? So information first, then have some transaction platform like Amazon, etc. Right, that's the thing step by step. And also look at Amazon, such a huge company today, but where do they first sell? Amazon for a pretty long time, it's the image of the it's online bookstore, which means they sell books. White books, very standard. And given the infrastructure, especially the logistics at that time, not great. So if you sell the book today, you can sell the book 30 days later, still the book. But now giving this logistic called infra ecosystem, very much developed, so Amazon can sell everything. So e-commerce today is much more rich and comprehensive than the e-commerce like 25 years ago. So coming to today, the same thing. We're still at the early stage of Web3. So when we bring these financial assets on chain, usually and very likely is that start with a standard product. You don't want to put everything, make people to understand so people can understand what it is. And it's straightforward. Simplicity has its beautiful features. So that's why T-bills, money market fund is a very natural early adopted, be early adopted as the assets on chain. But that said, look at history and the forward looking, it's pretty much certain there will be more and more assets will be tokenized. And the good thing is tokenization, this technology, this feature can literally represent anything of value. So that's why not giving a name called the real world assets, or you can call the real value assets. Of course, YRWA, in addition to the crypto assets, we do have a view. Our fellow panelists also have that view. But I don't, let me take a pause here. This is a, history is repeated itself from the simple to comprehensive to complicated and to structured. Many things will happen.
Great. Thank you, Henry. And then maybe just also while we're in this first section here is one of the things DigiFT can do, right, is we can take in stable coins as long as we're able to deliver RWA tokens, security tokens to an investor with a whitelisted wallet. With this kind of open architecture built on public permissioned blockchain to accept these stable coins, and obviously some of our partner friends and will be able to talk about how they see that also coming. What are some of the use cases that you're currently seeing in the market at the institutional level of how RWA yield generation tokens are being used for other Web3 providers to build their business?
I very much like the word you mentioned is open, the openness. So this architecture, the new architecture coming here, blockchain based, is open architecture. It's a permissionless kind of infrastructure, which we have Ryan here is representing one of the very outstanding infrastructure is Arbitrum. And of course, we have Amy here representing the technology for the Fireblocks to support all the things in a very secure and technical advanced way. And we have the center of the topic, right? We have Tianwei here is at the center of stablecoin issuer, and also very important as the licensed, one of the few in the world, the licensed stablecoin issuer. So put all these things together, DigiFT is marketplace for the connect asset side and the demand side. But as you mentioned, Kevin, we position it as an open architecture, which means deploy on public market, public chain, multiple stable coins, money on chain. Then of course work with like a Fireblocks, this tech, very advanced tech supporters to build the whole ecosystem. But that said is that coming to you can call it ecosystem and also the end-to-end kind of a cycle. Yeah, I'll take a pause here.
Thank you, Henry. Okay, so maybe what we'll do is we'll kind of just check if there's any sort of commentary from any of the other panelists. You're welcome to sort of jump in at any time, to comment on each other's sections, anything that Henry said. Yeah, happy to take any comments if you guys wish. But also I think that maybe something that I'm thinking about here is as stablecoins are basically growing, one of the key things I just think coming from an asset management background is RWA presents an asset allocation to typically a highly volatile sort of crypto industry, whether it be Bitcoin, Ethereum. You can get into T-bills, money market fairly quickly, fairly safely. And when the market reverses, you can be straight back in, right? You don't have to kind of work through the corresponding banking system. So by bringing it on chain, you've already kind of reduced a 2 to 3 day latency of using the corresponding banking system to being on chain, and achieving obviously sort of instant liquidity and transfer, but also now with the big brands coming in, reducing counterparty risk, which I think all of our friends here have been in the market for a long time, knowing in crypto counterparty risk is one of the biggest things. So maybe actually, thanks a lot for that, Henry. We'll move over to Ryan. So Ryan, maybe you can just start with a quick introduction. The audience love to know you and also what Arbitrum is doing within the RWA space.
Okay, fantastic. Thanks for having me here, Kevin. I'm Ryan. I'm head of APAC for Off-Chain Labs. Off-Chain Labs are the initial developers of the Arbitrum technology. For those who aren't that familiar with Arbitrum, we're a layer 2 scaling solution. And why Arbitrum? We have been growing the RWA vertical pretty aggressively, actually. So we were looking at some data points internally, and just under a year ago, I think last July, we had less than 10 million in RWA TBL and Arbitrum. To date, we have close to 350 million. And this spans across private credit treasuries, not only USD, but as well as Euro treasuries. We've seen alternative asset classes as well coming on. We have seen, gold. We've seen different types of commodities, different metals that are coming on chain. And a few things why these RWA teams think about Arbitrum. The first one is one thing we like to tell clients is Arbitrum is a platform. What that means is Arbitrum is one of the top 5 public blockchain stack, both in terms of liquidity, security, as well as the underlying tech stack. And secondly, we do have an SDK that allows teams to spin up their own blockchain stack at a point in time as they scale and they want something known as opinionated block space. So when you get to a certain stage, as enterprises or large financial institutions, something that Henry talked about was public permission. So how do you access the best of a public chain in terms of liquidity, developers building on the public chain, at the same time be able to build out an environment that is compliant? That's what the Orbit chain stack does. And I believe we are the only team in the market that allows teams to both build on the public chain as well as spin up their own environment.
Wow. Okay, so you guys are doing a lot, and congratulations. 300 million TVL locked, everything from boring money markets to exciting gold, right? And I'm probably sure more. But tell me, what are you guys doing actually? Let's talk about your SDK, and how is your SDK actually being sort of crafted around to supporting RWAs specifically? You also mentioned the word compliance. A lot of the RWA, not all of it, but a large part of the RWA market is in the compliance side. Can you talk to us about the SDK, the compliance side, and how teams could use your chain to get onto RWA?
Okay. Yeah. So for many teams, when they think about coming on chain, there are a few considerations. One is the underlying tech. 2 is how quickly can they go to market. So one example is Robinhood. Recently, we did an announcement with them for them to issue tokenized equities on chain. They know eventually as a public company, they want to have their own environment, the Robinhood chain, but that will come in phase 2. Phase 1, they're actually issuing tokenized equities on the Arbitrum public blockchain that's only available to users in Europe through the Bitstamp centralized exchange. As they move on chain, they'll move towards self-custody. And eventually, when they spin up the Robinhood chain, something I talked about, compliance. So what we have seen is teams have built out KYC as well as ongoing KYT. So you're able to track all these token addresses on a chain level within your own permission environment. You're able to create permission environment whereby only whitelisted entities are able to build on your platform or able to transfer stablecoins into this ecosystem. Another example would be Securitize and Ethena. They launched a chain called Converge Chain using the Arbitrum Orbit stack as well. What that enables them to do is there might be some permission DeFi apps that might be building on the chain with some of these RWAs that are coming on. These might be permission assets. So how do you allow these permission assets and whitelisted counterparties to interact with DeFi in a compliant manner? One thing that we have seen that has happened very successful on Arbitrum is the ability to tap into the existing DeFi ecosystem, the likes of like Panda, Euler, Silo, these lending protocols, and how can you rehypothecate these assets in a safe, compliant manner. Traditionally, we have seen DeFi yields being incentivized by unsustainable like token incentives. Today, we are seeing some of these institutional yields come on chain to provide a base level yield. And this can happen on both the public chain as well as on an Orbit compliant environment.
Wow, a lot going on there. I think a key element there, you mentioned self-custody. DigiFT is actually, again, a RWA smart contract-driven non-custodial platform. So clients are able to store these security tokens in their own wallet. So we feel quite unique in that respect. With respect to like self-custody, who do you guys work with? Who does Arbitrum work with? Of course, our friends Fireblocks here.
Yeah, definitely. Fireblocks is a huge partner for us across custody. We work closely with them on some of these tokenization RWA initiatives as well. I think how we view the relationship is more of a joint go-to-market. When you work with teams, enterprises, fintechs in the very early part of their journey, it's not so much about understanding like which is the environment they want to build on. It's more so understanding who are the safe, compliant infra providers that can build out these back-end infrastructure for them before they come on chain and decide how they are gonna think about go-to-market and distribution. So yeah, Fireblocks definitely a top partner there.
Got it. Thank you. And then maybe also just as we kind of move into the last part of this section is we've spoken quite a lot about RWA, tokenized, let's say compliant real-world assets. But then from the perspective of, let's say, stablecoins and sort of the growth of that market, it's obviously a hot topic now. Tianwei just came back from Hong Kong. We're going to press you on that a little bit later. But how does Arbitrum see like the stablecoin market? And then, because everyone and their mom now can come with the stablecoin. How's Arbitrum thinking about this, working with licensed regulated guys or not licensed regulated guys or anyone can build?
Yep. So Arbitrum is a public chain. It's permissionless. Anyone can build on Arbitrum. But how we think about the relationship between stablecoin issuers and RWA providers is, as these RWA assets come on chain, these are permission assets. How do you leverage the infrastructure, the permissionless nature of stablecoin issuers to be used potentially as collateral backing these stablecoins? But also, how do you build up the DeFi composability? So something we've been chatting with the DigiFT team about is how do you think about rehypothecating some of these RWAs, but we'll need some intermediary, and that's where stablecoin issuers come in. Not only in the capacity of using that as an underlying reserve, but thinking of some of the DeFi primitives. How can you potentially deposit an RWA permission assets on chain, work with a curator, for example, to borrow more of these stablecoins and search for different sources of yield on chain. One thing we've been solving for is we have a huge supply of RWAs on Arbitrum today, 350 million. But it's working with the providers, think about how can we grow the demand side. So who are the crypto investors who would be interested in purchasing these RWAs? And that's where stablecoin providers comes in. They help provide the liquidity gap, both on the secondary market as well as in the DeFi space in terms of permissionless assets.
I have a question for you.
Yeah.
What is up with all of these corporate launching their own chain? As you mentioned, Robinhood wants to do it. A lot of other corporates have in some shapes or form. There's already so many available public and permission blockchains out there. Like, what are you hearing in the industry of the rationales why corporates want to launch their own or even build on top of existing L2s? What are the considerations they're thinking about? Why decide to go on that path?
Yeah, so I would say a few reasons. One is on the ecosystem side. So when you spin up your own chain, essentially, if you think of spinning up your own L1 from scratch, you need to get someone like Fireblocks involved. You need to be pitching StraitsX to get the stablecoins issued natively. And these actually cost a lot of money. So when these enterprises think about launching their own chain, they're thinking about opinionated block space. And what I mean by that is they have a particular use case that they're trying to bring on chain. They have their existing distribution network. They do not want to rebuild the existing infrastructure. They want some level of customizability in terms of like KYC, custodian relationships. They want some level of like control. The other reason is how do you tap into the liquidity layer of an Arbitrum public chain? For example, today we have over 8 billion in stablecoins across USDC, USDT. It's pretty evenly split as well. So it's essentially can access to different type of demographics. USDC maybe more institutional, USDT maybe for holders across Asia. The last one is, and there's not spoken about as much, is economics. Today, if you're building on a public chain, if you're an enterprise, essentially the gas fees you're paying, even though it's minimal, essentially that eats into your bottom line. If you do launch your own chain, you can control stuff such as the sequencer revenue. Today with the Arbitrum stack, for teams that launch their own L3, for example, it's free for them. They capture all the sequencer revenue. If they launch their own L2, for example, similar to Robinhood, they contribute 10% of their sequencer revenue back to Arbitrum.
I like that on economics. We're a bit over time, but I feel it's important to kind of like ask you this question. Private versus permission chain. Can I quickly go to Amy, Tianwei, and you, and then if you guys just tell me who's going to win long term, private or permissioned? Amy.
Private or permissioned?
Chained.
Permissioned.
Yeah, I think actually the question is actually back to the economics we're talking about here, which is actually, I feel, if I were to ask you the quick right question here, which is the factor that you think causes most of the organizations to think that they want to actually spin their own chain? That should be the right way to frame the question, in my opinion, because if you look at it, anything we talk about, at least from the first 2 points, can be achieved with permission on public chain. Because
on public chain, yes.
Right, it's something that we have a lot of conversation with both regulators around the world that the restriction, be it the ecosystem control or is it the compliance related matters, has been, been proven that can be done, and like past few years, with Project Orchid, purpose-bound money, you can actually do this on a public chain, just having some permission layer on top of it, instead of having to spin your own chain. And in my opinion, the only reason fundamentally leaving here is that you have some economics issues that make sense for you to do so. So maybe what's your thought, like, in terms of the pressure you're seeing from most of the market players out there?
Yes. So for us, when we see like enterprises with huge distribution channels, huge user base, that's where they're gravitating towards their own custom chain, whether it's public or permission, but their own environment whereby they still control the economics. And public chain, we run one of these top L2s in the space. That's where we see teams, building out experiments, very early stage. They want to validate without having to think about, where they're going to get users, how they're going to source for liquidity or build out the backend infrastructure. So I'd say a mix of both, depending on which stage of your company or which stage of how mature the product is.
Spoken like a true statesman.
Answer.
Such a hedged answer.
But he did say something very important: economics. Right?
Yeah.
Economics may be the driver. All right. Thank you so much, Ryan. So you heard it here from Arbitrum. We'll move on to the next section here, where we have our very own friendly Fireblocks speaker, Amy Zhang. Yeah, neighborhood Fireworks. So Amy, please, not that you need any introduction, but please, quick personal introduction, what Fireblocks does for the audience, please.
Of course. My name is Amy. I lead the APAC business for Fireblocks. And Fireblocks really started 7 years ago. And at that time, we were there to solve a particular challenge, which is active crypto traders needed a wallet that was equally as secure, but also they could get access to it on a regular basis, high frequent basis. So Fireblocks at that time was built really for that crypto trading use case, connected to different liquidity venues, connecting with each other, which now we have the Fireblocks network. But over the last 7 years, our customer segment have really changed and grown, right? We're still servicing a lot of the crypto natives, but also now we have a lot of retail fintechs on our platform, especially in Asia, where there are a lot of these super apps, crypto exchanges, retail fintechs, globally like Robinhood, Revolut, and so forth, that has different sets of needs, which is around like scalability, right? So these guys are managing hundreds of millions of wallets, doing tons of transactions every single day. So things are like throughput and scale is really important to them. But also retail exchanges are the largest target for hacks ever in our industry. So in servicing those folks, we've then obviously developed very, very robust security posture to help support and make sure their assets are safe. In the last, I would say, 5 years, we're seeing a lot more traditional players coming into the space. Most notably, you've got the financial institutions, which are the banks, as well as payment service companies, which now in the last year has been all the hot rage of our industry with adoption of stablecoins, but also PSPs leveraging stablecoins as a medium of payment for them, whether to do cross-border, paying payouts, and different use cases thereafter. And the final pillar for Fireblocks services are what I consider corporates, or non-financial corporates specifically. Those ranges from back in the days of folks looking to launch NFTs, getting to really that Web3 strategy, all the way until today, corporates looking to use either stablecoins as part of their treasury, or even other crypto assets as part of their treasury as well. We engage kind of with all of these diverse segments of folks across their various different needs. So going on to RWA, why we're here, right?
On RWA, I always enjoy speaking with Amy on panel because the amount of data that Fireblocks and sort of end connection points, there's always something to be said. So specifically on RWA, what are you seeing in RWA? You mentioned asset managers, banks, payments now starting to muscle in on this kind of this game on Web3 finance. Yeah, tell us what you see in the data.
So what we've realized is in order for an RWA to be successful, the product needs to be really 10 times better than what it was in its original form for people to be willing to take on the technology risk, to learn all the new things, build all the new ecosystem around it in order to buy these assets. So then naturally, tokenization of money has really played out, right? Because really stable coins is arguably 10 times better than the way fiat money moves. Tokenized money market fund in some shape or form is 10 times better the way you get subscribing to these assets today. So these things naturally are becoming an adoption, but also with regulatory framework that is already existing in in place, clearly the tokenization of money narrative or money-like narrative dominates 90% of our conversations with investors as well as asset managers and banks. The remaining portion, I actually think are more things that are like, I would classify them as assets that were difficult to get access to because it was just too expensive for a bank or a distributor to offer it as a product. So back to the point of economics, like a lot of private banks, a lot of distributors like wouldn't want to launch these products because it's really expensive for them to run it. But now with use of tokenization and various different technologies, they can do this much cheaply, but also because the growing of the crypto native industries, they now have a new segment of customer base that they can potentially engage with that they historically maybe didn't get access to in some shapes or form. So these like largely makes up the RWA demand. A lot of times I would say they first start with what sort of assets do I want to tokenize? And then it really comes down to like, do you think that whomever is going to buy this will do it because this stuff is 10 times better? Thereafter, and we don't spend as much time talking about it, actually, is chain choice. And I'll explain why that is. Many years ago, I think people wanted to choose a chain. I think today is pretty much table stakes for you to go multi-chain. And that includes private, public, permission. Most issuers are not looking at like one ecosystem. They're trying to maximize their ecosystem. Yes, they're doing it in a phased approach. And because of that, like things like interoperability becomes a huge request for them to manage, because as an issuer, yes, I can issue on like 5 different chains, but what sort of like user experience do I want to design for my end users if they got to go and choose between what chain, what wallet, how do I manage all of this stuff? Like I need to provide a lot more services on top in order for the ecosystem to adopt. And then it's really around like the details of actually tokenization. People like we talk about tokenization being really easy and it's simple, but like we've done the work. There are solutions out there for it. You're trying to get somebody else to build their own smart contract for the first time, building their approval governance control for the first time, thinking about like, how do I audit this smart contract? Which, by the way, it is not cheap to get your contract audited, right? So like all of these nuance that comes to require you to launch a token, whether it's stablecoins or other RWAs, there's a lot of like technical nuance that goes into it. So very often, we work with the clients to help them because we already have this stuff all inbuilt already. It's been battle tested. All the clients have used it already. So for our clients who now, again, talking about Hong Kong, right? Like there's a lot of excitement happening in Hong Kong with many issuers coming to market. And they're like, I need to apply by this date and I want to launch by this date. How can I get this up and running as soon as possible? And once they start digging into the detail of doing all these work, they come to us to help them to make that process very seamless.
Got it. And I guess that in that case, like you mentioned stablecoins, RWAs from your guys' ecosystem, you're crypto natively supporting this. Has it been like a 3x kind of coming off a low base? Has it been like a 3x increase in interest, or is it a 10x? What kind of metric are you seeing in terms of interest from RWA specifically?
I mean, I would say, kind of think like, how would I highlight this in a way that is easy to address? I think conversation-wise, I've done this analysis. It's probably, I would say, like 10 times of the conversation difference from what banks and financial institutions used to talk about a year ago to now.
So it's like, I want to trade crypto, can you help me? Versus I want to actually improve my entire kind of infrastructure, coming out with a new product and enter a new market, right?
I would say even a year ago, they were like, what should I do? And now they're coming to be like, we want to do this.
Right. Product specific, right?
Very specific. I think obviously some institutions have looked at crypto related services, so call it Bitcoin custody or Bitcoin trading and so on and so forth. But that's really now where the banking conversation is. The financial institution asset management conversations is really about tokenized real world assets, tokenized, and particularly stablecoins and tokenized money market funds.
Can we just unpack that really quickly? So obviously Fireblocks, amazing, congratulations. You guys have done like fantastically well, crypto native, but is the actual bigger play here is, the asset is one thing, the cost and liability for some of these financial institutions and reducing that cost is arguably maybe even the bigger play. Do you see that? I mean, in Fireblocks' vision to really provide that as actual infrastructure for them to look at or revisit their own actual existing sort of setup, operational setup?
So, of course, I think if you were speaking from the perspective of a technologist, you want to give the shiniest, fanciest engine into the client to run, right?
Yeah.
But the reality is, anybody who has worked at a bank would know that the core banking system, the backend infrastructure of financial institutions are extremely complex. Probably older than me in age, and it's a very difficult to, in a way, think about how you want to retrofit your fancy, nice, shiny VA engine into a Toyota. No offense against Toyota. But that being said, I do think that a lot of the banking journey that they're on with digital asset is indeed a digital transformation journey that they're on as well, and that goes in parallel, right? In the same way, if you look at which countries in our book of business that had highest adoption when it comes to digital assets within a bank, it is also coincided with countries that had highest adoption with cloud. For example, Australia is a very cloud-centric environment. All the banks have gone on the journey with cloud and actively uses cloud. And in fact, all the banks, including the central bank, now has all kinds of digital asset initiatives. On the flip side, if you're talking about a country where people are very, very stuck still on like on-premise based setup, they first need to get around to like, I think what Henry mentioned, like onto the internet age first with cloud first as a mentality, then they can take on all the fancy things that we are all building, because by nature, the industry built on cloud, right? And the industry built on the ability to connect, that's open architecture and do all of these things. So there's that parallel happening. And for us, we really, I would say, in a way, even though we see a lot of our customers see what they're doing, we really just go where the demands are. Like customers tell us, hey, we want to get X. We tell them if we build X, how much? And then they're like, why? I'm like, great, we'll do it for you, right? So a lot of times when we go engage with companies, we just go where the demand is. And today, the businesses that still has the most operational pain, most security pain, most highest value, given the fact the nature they operating is the core crypto business, and that makes up around 60% of what we do. But the reality is that the traditional market and the securities market, the money market, whatever you want to use to measure, is like multiple sides of crypto markets today. So of course, that is where we are positioning ourselves to and trying to support the banks and the payment service companies as they go on this journey with us.
Great, thank you. Maybe just one last question before we move on to StraitsX and Tianwei is, again, you look across like different verticals supporting in like the multiple different use cases, but what are the use cases that you kind of see popping up based on demand within is it like a borrowing and lending? Is it like a sort of looping strategy that someone wants to do in the DeFi world? I mean, for our part, DigiFT, we're trying to pull the institutional sort of branded license yield into the Web3 space. Maybe arguably, it can be a bumpy journey for those that have been in crypto a long time. But yeah, what kind of use cases are you seeing?
So one trend is certainly like the consortium play with banks to launch some sort of either tokenized money or CBDCs or stablecoins of sorts.
Kind of like the Citibank consortium recently announced.
Yeah, there's different versions of it. I mean, there's a consortium happening in Korea right now where they're doing a consultation. You've got effectively the RBA CBDC project, which we're participating in, that's looping all the banks together. There's like consortium play. I think it's clearly a trend that is happening within the various different ecosystems. That's one. The other thing I would say is the crypto players getting TradFi. So the other way around, right? You guys saying you're pulling TradFi into crypto, folks. It's like I actually think the crypto guys are going to TradFi. Pretty much everybody, when we go and speak to our big customers who come from what we consider crypto native background, crypto native market makers, crypto native exchanges, are all on the path of getting licensed to launch tokenized securities, effectively taking the infrastructure and the expertise that they have in the digital asset space, now plugging in traditional assets on their platform. So for example, it's like, if you think about it, the crypto exchanges are running 24/7, high availability, and that's just the world they are used to, right? You're trying to compare that to a traditional stock exchange that has, closing time and all of these nuances. The journey that a traditional exchange that needs to adopt to do tokenized assets, the very different journey than, let's say, a crypto firm that they need from an infrastructure perspective to launch a tokenized security. So that is like I think a trend, right? Like Gemini's launching those stuff already. Revolut, Robin, all of them are all in a way using the I guess the operational layer and the security layer that they built, learning from the crypto space, now going to traditional market and competing with the big boys, I would say.
Amazing. Wow, lots to consider there. I think I'll need to like sleep on that tonight and
rethink your whole entire life decisions, you know? Like...
Exactly. Hashtag not investment advice, but I think I'm a buyer, right? So you guys have the audience have heard it first. If there's anything about adoption, Fireblocks are where it's at. If anyone's got a real shot of forcing at least on infrastructure process redesign, in our friends Fireblocks, we trust. So moving on, StraitsX, Tianwei. Gratefully, the CEO of StraitsX, you've brought this company along quite a long way. We were just before this, for the information of the audience, you guys are licensed up to the hilt, right? You're kind of like speaking to the regulator about, and you have to remind yourself, it's like, oh, which license am I asking about this from this perspective? Please give us an introduction to yourself as one of the leaders in stablecoins globally, and also just a little bit about what StraitsX does. Yeah.
Hey, first of all, thank you both Kevin and Henry for having me here, and thanks for audience for spending time for quite a bit of time hearing to us rambling on all different states that we're at. So my name is Tianwei. I'm one of the co-founder and CEO of StraitsX itself. A little bit of background, I think for what Kevin has mentioned, StraitsX is now known as one of the, we are the issuer of XSGD, which is the one-to-one Sing dollar backed stablecoin, and of course most recently XUSD, which is the one-to-one US dollar backed stablecoin. Very honored that both of these stablecoins have been recognized by MAS to be in the early compliance of the upcoming stablecoin regime itself out of Singapore itself. But if you look at and double-click on that a bit more, the background of the company has been in this space as a regulated FI for almost 10 years now, which I co-founded around in 2016 itself. And what happens here is, if you see that as part of our rebrand, our tagline here is stablecoin rails for real world payment. We have been focusing on actually using on the application side of this whole thing. And I think that mainly folks will know us maybe from our business line in 3 different verticals. The first side of this is all related to payment, specifically stablecoin payments. It's our bread and butter part of the business for the last 10 years. And we realized that stablecoin is an important bridge for the more traditional folks to get themselves into the Web3 world and vice versa, on and off ramping solution. So that has been a big part of our push. And you will see XSGD or XUSD being listed across international exchanges and starting to be used in some of these real world use cases that we talk about, be it out of it like Ryan mentioned, or is it from a payments perspective where Grab and Ali was involved, right? And then on the other segment of that, we actually still do, and folks probably already heard about us, is that we're actually also a very big Visa card issuer in this part of the world, right? As a BRIN sponsor itself. So some of the largest card program out of Singapore, like recently fintech like Chocolate Finance, or is it stablecoin cards issuer like Red Dot Payout Hong Kong, their underlying cards infrastructures are also provided by us, which is why we meant stablecoin rails, right? But underlyingly, these businesses have reinvented the way they have done businesses by using stablecoin as the core part of the business, mainly to improve efficiency and where they can see that it's appropriate in terms of attracting customers in terms of cheap source of fund, or is it in terms of bringing programmability that get them access to and interoperability to get them access to different kind of RWA assets or other product lines. And last but not least, of course, the line is related to our QR code payment, which is a very big part of our offline business for the last 10 years, right? So StraitsX is also one of the largest offline payment acquirer in Singapore from a PayNow perspective or QR code from Grab perspective. We also have about more than 200,000 offline QR code merchants in Indonesia itself using the national rails known as CRISP itself. So this is where we start to see again a lot of application side of this thing where cross-border payments coupled with stablecoins, where we start to see this as a killer strategy in terms of adoption, right? While a lot of regulators around the region or is it fintech companies are seeing a lot more excitement in trying to do this kind of adoptions, it's all related to this kind of application side of this thing. So like you mentioned, I just came back from Hong Kong and what Amy was saying, there's a lot of excitement in that space. But maybe just to summarize a lot of things what I see from everyone's conversation, you can really distill this into 2 groups, right? The first of the groups of folks are the folks that are all trying, like the crypto guys that started off with crypto related projects, trying to drive themselves to become more and more of a neobank, right? And these guys sees a lot of benefits because of the interoperability of stablecoin, right? And they see that interoperability of the blockchain itself. They see that the interoperability natures allow them to experiment very quickly, build very cheaply, and also get access to a lot of market that they traditionally do not have in terms of ecosystem, right? They do not have to reinvent the wheel. And these are the guys that potentially most likely will be using an L2 solution like what Arbitrum have, or work with a stablecoin custody supplier like Fireblocks to get to market quickly, right? And these folks have been tremendously successful over the last few years, right? Which is the likes of Pay, when I mentioned, which they also start to offer, Visa card itself backed by stablecoin. So we're seeing a trend of a lot of this company that really see the opportunity to optimize on the efficiency that's brought about by stablecoin itself, right? I give a good example in terms of what we start to see in terms of cross-border payments, whereby, in the past, if you are a fintech that's trying to say that I want to allow my users who are traveling overseas to scan and pay, that itself is a very difficult job that used to be heavy lifting that needs to be done. It takes a couple of year investments, working with banks, different regulators to get started, right? Because of the interoperability nature and what we have done recently with Grab and Alipay. So now any kind of Alipay users wallet, when they come to Singapore, they can simply use Alipay wallet to actually scan and pay at all Grab merchants in Singapore itself. To them, this is the Alipay payment, but behind the scene, actually every single transaction is settled real time with a stablecoin itself, right? In this case, XSGD. And the efficiency that we all achieve here is multiple fold, right? First and foremost, if being in the payment space for the last 10 years, you realize that most of the traditional way that what Amy said, this is 10x better, because traditionally when we do payments and as acquirer for QR code merchants, payment is always a two-part flow. There's a communication side where your phone confirms the payment, the EDC prints out the receipt, you get a coffee and you move on. But actually behind the scene, there's just the communication part. The settlement usually happens a couple of days or even weeks later because of different needs to use SWIFT or clearinghouse or different intermediary behind the scene, right? They're introducing inefficiency in terms of cost of fund or FX fluctuation. Stablecoin fundamentally solves that because of the nature of how blockchain works, right? They can immediately, where a communication is a settlement because the finality is achieved when the underlying currency that's needed for currency for settlement is being received on the merchant end itself. But all these things is what I feel going to be obfuscated from most of the retail users. They will not know this is actually happening. They simply get this service and they just get it faster, better, and cheaper, right? And because of this infrastructure being laid right now by Grab and Ali, a lot of the small players are going to be benefiting. It's similar to what Fireblocks has mentioned, right? If we have spent years building out this ecosystem, then the infra is being laid. Smaller players can quickly come in and actually use it and get quick failures or quick experiment to actually leverage on this infrastructure, which is why the interoperability natures and the openness of a blockchain-based solution is what everyone is very excited about. So this is one big ecosystem of camp of folks that have been reaching out to us and been communicating with now the regulations going around the region that everyone seems to be starting to accept this as a common things of how things are going to go going forward. It's no longer a fad, right? But on the other hand, which is what the question we've been asking about the tokenomics, right? What would make sense why everyone seems to want to issue their own stablecoin? I wouldn't say it's everyone. It's bringing back to what Amy was talking about in terms of how, in some sense, maybe we bring it back at what Henry was talking about, the internet, cloud computing. I think the consideration is still the same, right? If you are a mega company today, today for all of us, we use, internet, so cloud computing is like a common thing already. The consideration is always the same if you are the CEO of an organization thinking about, should I be building my own? Or should I be using a service provider and get me to market faster, right? It's the same common sense questions here right now. Then it's tokenomics or is it economics right here? If I'm like Amazon, I'm huge, and it makes sense for me to build out all my infrastructure myself, and then I will resell it. That's how the AWS business was created. I used to work for Amazon, so there's an internal story that we all talk about, right? Because it makes sense. I'm the largest users already. I have my own infrastructure needs. If I can build this thing out, I can resell it. I can build an ecosystem, right? But on the other hand, a small players these days, if you are a small startup or a small company just trying to dabble into cloud computing, if you still are, right? The fact is, it's a no-brainer, right? Why would you invest so much to build out a whole infrastructure to just fail, right? Because that itself might not be the key focus of the company itself, right? So you will see a lot of players on that end will just simply be using a cloud computing. So you bring back to the analogy that we are seeing right now on the other spectrum that I'm seeing from all the regional players is, where are your positioning? Is this going to be a core part of the business? Is this going to be super huge for you that makes sense that given like likes of big players like Ali, like JD, they have huge infra, right? They already are going to be the largest consumer of this network. They feel that I myself will be issuing my own chain, then I'll be the largest user myself from a cost perspective. Then it will make sense in the long run that I invest in this space. Then trying to use another third party one, right? So that dynamic plays a lot in just how people are viewing these things.
Kind of like a JP Morgan private only internal coin, right? If you're big enough to get it done versus there's a whole big wide world at the bottom of the triangle that that can leapfrog, right? Using existing infrastructure.
Example. I think a lot of times when we speak to banks are waking up and realizing this. And when we talk to PSPs, they're realizing this as well. Historically, up until stablecoins really being widely adopted, if you want to move money, no matter how many application layers you have in between, at the end, you have to go through a bank.
Yes.
Okay? At the end is a bank-to-bank situation. Stablecoins is probably like the technology in the world that is disintermediating that, where you can move value, where you and I can agree the value and have the finality without involving a bank at all. Now, the underlying sits with the bank, right? The treasury sits with the bank, but the value agreement and the messaging is done outside without ever dealing with the bank's API.
Correct.
So that's like a huge change. So a lot of our PSP, payment service provider clients, sees this as a way to widen their margin, because historically all the PSPs are fighting for like tiny amount of margin, and then the bank is taking most of the margin. They see as an opportunity to do that. The corporates, again, similar ideas, like, hey, I can move money now without having to pay a bank in some shapes or form. That's, again, margin cost that I get to save. And then from the bank's perspective, they're also realizing this as well, because if you're a bank today and you're not banking some of the largest stablecoin issuers, you will lose deposits, right? You'll lose custom deposits from what used to be your bank and your business. Now people are using their stablecoins sitting in another bank thereafter. So everybody is realizing the opportunity, and then subsequently all of the service provider in the payments ecosystem and the payment value chain is seeing, where can I capture more of my pie? Because the end users will pay $1 is $1 is $1.
Exactly.
Yeah, everybody's fighting between,
And I keep repeating, right, that what we are seeing on the trend itself, the adoption, like what Amy mentioned, right, that what we are seeing here right now is just the beginning. And most of the market studies are telling you that this is just the very beginning, because the mainstream guys and the retail guys have not really come in. Not from a speculative perspective, but more from the adoption side of it. And they will not understand how these things work, right? $1 is $1 to them. As long as they get their coffee, they move on. But the real benefit will be in terms of the settlement time, in terms of programmability, and the openness, which we will just keep emphasizing that a lot of this organic adoption are happening because developers, CEOs or CFO around the world are starting to see that they can do this without having to invest a lot upfront. And then they can get their operation to be more efficient before they start to think about, hey, do I really want to spin my own chain and run my own ecosystem? It's kind of like what cloud computing have done to us for the last 10 years or so, right? We can start small when it makes sense. Then when we really need to optimize, then we start to think about, I should bring this in-house, right?
Henry, I'm going to call upon you here. There's a lot that got said here, but also the reason why I think that we've spoken about disintermediation, Amy kind of jumped in that, Tianwei jumped in on that. Disintermediation of the banks, right? At least on the payment side. But Henry, you always kind of internally talk about, your vision about stable coins being used to pay for something, spend, but then also get used for investing in something. So Henry, I want to kind of just put that to you based on what the team here have actually spoken about. And then also, I think, can you also just talk about, Tianwei mentioned two big titans, Grab, Ali, some of your partners, right? Also from the investment side, we've got like guys like Invesco and UBS that are working with DigiFT. These are other big brands. So two questions, disintermediation. And also for the audience, I just want to also highlight, Henry used to be deputy CEO of both Citibank as well as also Standard Chartered China, and former CEO of East West Bank. So when it comes to banking, and now a reformed and recovering banker into Web3, you're hearing from the best of the experts here. So Henry, please, over to you.
Yeah, I really appreciate the very valuable comments from the panel, the fellow panelists, right? Just follow Kevin, what's your question? I would say what to put us together is, I think stablecoin is at the center of this big change. Stablecoin is the digital representative for money on chain, and the money is the medium of exchange. But giving this technology background, token-based money, right? Especially licensed, then become institutional grade. Now will drive we can expect the mass adoption or quick adoption of money on chain, just like money on paper, money on online, now money on chain. Disintermediation, blah blah, so efficient. Now once with this money on chain, there will be two things people quickly talk about. One is how to pay, another is how to earn. Payment, that's why PSP, etc. Amy also mentioned, Tianwei mentioned, the payment company, they quickly upgrade. Just like past 20 years, people quickly upgrade from the normal paper money to electronic money, right? Then this on-chain money is even more efficient, cross-border, wallet-to-wallet, atomic settlement, real-time settlement, because settlement and the clearing settlement happen simultaneously. So how to pay? People talk a lot. I just put in a forecast is people will quickly realize how important and how powerful it will be is how to earn, leverage on the token money, because the account system will be fundamentally changed from the previously mostly so-called bank account based to the wallet based. And the wallet can be self-controlled or through some institutional grade, like what the Fireblocks provide, right? And I would say even the bank will not be the bank like today. So the account system changed. So the money into the wallet is account. Now, how do you earn something? You have to buy something to earn. That's why have the demand, very natural demand for the RWA. Actually, PTC is also real world asset, right? It's a real value asset, but it's just one type of assets. But once have more and more money coming in, the demand will be diversified. So BTC, ETH, this kind of assets will continue to have a very strong position in the asset family, or even more. But the others, because the current AUM or TVL, whatever number you measure it, is in a huge number, they will also move on chain. Then everything on chain is token to token, then you can better realize the efficiency and the security and the transparency and self-control. And later on, the programmable, the composability, in the end, to achieve, you pay anywhere, anytime, any amount. And the payment can be any asset class, cross asset class, cross platforms, and across geography. In this together, I would like to use a word like really need to reimagine the future, the payment world, and the future capital markets world.
Great. Thank you, Henry. All right, so we're coming up on 4 o'clock, so I wouldn't be doing my job if I wasn't going to keep this party under time control. So with that, I think we're going to move to really wrap up here. And I just want to be able to give thanks to our friends, partners, Henry, also to you for joining this webinar, and further to the audience that have actually joined to listen to these expert opinions. And these are opinions, back to this disclaimer. So with that, I just want to remind everyone that this is the DigiFT Academy, or it's a series of events. Please do look to aim to book and consult and subscribe to the events. We are on time. We do recognize that there are some questions. Don't worry, we will actually take those questions and we'll look to get back to you in writing if we can. And so please do join these events. Also, we're a sponsor of and host of the Capital X conference. So just to let everyone know, we're running our own conference this year. We're grateful to be able to have a lot of institutional sponsors for this. DigiFT is the leading voice of RWA in APAC, we hope. And with our friends and help from the community, we look to also become a global voice in RWA, much the same as our partners that are here. So we look to you guys to be as big as you guys. So thank you for joining us today. Hope you found it very useful. Feel free to follow us on social media. And if you're a Web3 builder exploring on yield products and you want to learn more about how you can build with us, please do get in touch.
Maybe before we end, just one takeaway from each of the panelists that we have here on the topic of the future of stablecoin utility, right? What would be your one big takeaway from that?
From the conversation we've had.
Yes, yeah. Like from each of you, what's your point of view? What's your one big takeaway that you want the audience to go away with?
Oh, okay. You looked at me so I can start.
I can. No. If I've been saying this a lot, and I think it's still going to be a common thing, right? I think whether the audience like it or not, or everyone out there or not, there will be stablecoin. There will be a lot of different stablecoin issues that will be happening. So this is no longer a fad; it's a global trend, right? But however, underlyingly, whether the users, during their experience actually know that they're actually using stablecoin, that might be a different discussion, right? So about that, if that is a global trend, just putting on my thinking cap for everyone faces, it's just about whether you want to adopt this or not, right? It's not something that will not happen. It will happen. It's just how you're going to be involved and how you're going to capitalize on this. Is it part of your business, or is it how you're going to be doing your daily settlements and sprills, right? So I think a lot of folks on the panel will be happy to have conversation. If anyone need help here, yeah.
Mm-hmm.
Should I go next?
Yeah, go ahead, Ryan.
So for us, when we look at stablecoins, we have come from a state whereby fintechs, you don't look at your e-money and your Wise and your Revolut as different form of money. Same thing, I think the future of stablecoins for us is it'll be universal. It'll be accepted as a form of currency across different use cases. So it could be investment. How do you, get access for folks in the emerging markets? How do you get access to some of these traditional products that would otherwise been inaccessible? Secondly, on the payment side as well, how do you solve some of these pain points from the merchant's perspective? How do you reduce the cost of merchant acceptance? How do you transfer some of these value back to the end consumer? And when we talk about cross-border payments as well, how do we solve for some of these issues? As we onboard more stablecoins on chain, I think we'll reach a stage whereby stablecoins will be used similarly to how it's being viewed as fintech e-money, and there wouldn't be a consideration around like, is it going to be XUSD? Is it going to be, another stablecoin issuer? It's more so what sort of use cases and distribution channel that stablecoins would be able to unlock on chain.
Yeah.
We talked a lot about how currently the user experience for the ecosystem is really, really bad. So it's an opportunity for players, whether they're banks, PSPs, retail exchanges, or whomever, to come in to improve the current user experience required in a multi-chain, multi-asset world. So that's like part one of I think, an area of opportunity. And then secondly, it's really this convergence. A lot of the things we're seeing now is like, yes, you've got this really exciting Web3 space where the stablecoin that's moving super fast, but the second you're trying to bring it back into the Web2 world, whether it is for stablecoin issuers getting access to treasury, redemption, recycle, redemption cycles and so on and so forth, to traditional players that wants to get access to crypto investments. Like a lot of the challenge also right now is this, like, okay, we were very excited for Web3. The second you connect in any shapes or form into a Web2 world, there's just a lot of, like, I think, issues that we have to go in and address. So I think for folks, again, these are just great opportunities for operators coming to alleviate. And at the end of the day, if you're a Web2 company that already have kind of the existing business ecosystem that can dictate economics, it's a great way for you to go and leverage and get into the Web3 space to build up those ecosystems as well.
Henry?
Yeah, I would say when we say the Web3, there are two things people are mentioning, sometimes a bit confusing. One is Web3 as a way, another is Web3 as an asset. People may say BTC is in Web3 assets, crypto assets, which is right. But today's discussion, we're more focusing on like a Web3 as a way. People can say it's like openness on chain or DeFi, blah, blah. I would say both are right, but we just need to differentiate what's Web3 as an asset or Web3 as a way. But Web3 as a way, I would say even have a more impact. That's why I call the RWA is still the T-bills, still the real estate or gold. We move in the Web3 way, become tokenized gold, tokenized T-bills. Then moving Web3 as a way, unlock and or open a very wide open space to further digitize and the current assets of value, but also create a lot of unprecedented use case of the composability, interoperabilities, programmable kind of effects. So at the center of it, people talk about stablecoin as money already on chain. Then there's one thing people can more easily understand. Then build on that, there will be more and more assets on chain together with all those assets already on chain, like a BTC, ETH, right? The crypto assets. So all this together, they will open up a new era of the overall financial markets for payments and for the capital markets, how to pay, how to earn. But that said, is we need to put in a more transparent way. That's why mentioning back to this point is institutional grade DeFi, because if not institutional grade, will be not much trust, no big money. So that's DeFi way, but institutional grade.
Thank you, Henry, and thank you for those closing comments. I think we're all about the money, right? so jokes aside, look, thank you. DigiFT wishes to extend a warm heart thank you to, again, the audience and also to our friends and partners, Fireblocks, StraitsX, as well as also Arbitrum. And in my new career as a YouTuber and influencer, thank you and subscribe. Take care. Thank you, everyone. All the best.
Thank you.
Thank you.
Thank you.
You're in the what they call creator economy now.
Yeah, creator economy.
Creator economy.